driving. My name's George Long. If you don't know me, I am the Managing Director of Chartered's Land and New Homes. We regularly do these sort of updates for the South Coast Property Show, and today is no exception. But as I was driving in today, I did think it's a bit like a property market, very gloomy, and we're heading to Southampton Football Club, where we're having a real problem at the moment. But in fairness, what's happened with the property market is broadly in line with what we thought. The cost of living, affordability, mortgage rates, all it means is we've got less people buying, less money. So it's a very simple matrix, really. So I'll show you some of that in a minute. But I thought rather than an agenda, I thought we'd have a pictorial agenda today. And actually, it's actually interesting to note that all of these people are interlinked. I think we'll start off with Free Gear Keir. Looking up these nicknames actually the other day. He's obviously sent himself to sleep, but we have a real problem here between the Labour Party and Trump. And I think for those that don't know, the Labour Party sent 100 former and current Labour Party members to America to help Kamala Harris in the election, which she then lost. And I think one of the Democrats called it illegal. So I think that special relationship we have with America is going to become very special indeed, very quickly. Rachel, on the bottom left, we've had probably one of the most confusing budgets of all time. I think the average Joe who sat there after the budget thought, well actually, what has changed for me? And actually for the normal person on the ground who isn't a business and hasn't got a huge amount of inheritance tax to pay, it's nothing much has happened from their perspective, really. So a lot of stuff was touted, not a lot of stuff that was touted actually happened. So what we've seen in the property market is it's just creating quite a lot of confusion, really. It's taking a bite out of the market. We thought actually with the interest rate cut that we've just had, we'd had a nice little run into the beginning of December, where a bit more of pushing the property market up, but it's not had that effect. And obviously with Trump coming in as well, I think we've got to slow down till Christmas now, really. But there are some deals out there, but it's the expense of price. And I think especially in the development market at the moment, developers are dropping their pants to get sales, really. But I thought talking about the budget, Nationwide gave their little take on stamp duty, and they said it's going to be less in areas where house prices are cheaper and more where homes are pricier. So thank you very much for that. But talking about stamp duty, what has changed? We've got to remember as well that a lot of people think that stamp duty happens immediately, but no, most of the stamp duty changes, bar one, is happening at the end of April next year. The end of March next year, beginning of April. So I think you've got to see what has changed. And if you look at the couple of examples there, really, it's a marginal change in stamp duty. But you've got to remember where that stamp duty comes from. It comes out of your pocket, and it comes out of the equity of your property as well. So it is an additional cost to pay. If you think how much an estate agent costs, how much the solicitor costs, it's another additional cost. So we hope actually that by the time we get to January next year, we will have had on the 19th of December the next MPC meeting to see if they're going to reduce interest rates again. But between now and then, we've got 2 inflation reports as well, which is going to be important to know what happens in those 2. But I think a lot of that inflationary pressure won't come quite yet. So I think we might see that actually we'll have another interest rate cut on the 19th of December, and then actually we'll have the race in January to avoid stamp duty. So this is an example here of if you're buying property up to 500,000, how much more it's costing you. Effectively, really, you've got the 2% rate that comes in from 125 to 250, and it's going to cost you, if you're buying over 250, an extra £2,500. So it's no small amount of money, but in the relative property transactional arena, it still makes a difference, because if you've tied it into your mortgage, you've not got much spare cash, you either have to redo your mortgage offer, or you're going to have to come up with some money to add it to give to your solicitor to pay stamp duty. If we look here, is this changing? Did that change?
Yeah.
Right, here we go. Yeah, sorry. Let me just go back. But I think the key. Where were we? Yeah, here we go. Sorry. Yeah, I think the first-time buyers is where we're going to have quite a lot of the changes. If you look it's worthwhile looking at this because it's quite confusing, stamp duty, with the way it's set up. At the moment, first-time buyers don't pay any stamp duty at the moment, up to 425, and this is what's going to change. And I've done a couple of examples here on the right-hand side, where you've got what first-time buyers in the UK, so that's the average price in 2023 that first-time buyers pay for a property there, 265. So they're still not going to pay any stamp duty, so that's good. But I think when you come to the southeast, the average price is 353,000. So it's going to start costing first-time buyers more. And I have to say the first-time buyer market is where we have suffered the most. Back in 2022, first-time buyers made up 52% of the housing market. So that's a really interesting figure to note, is that over half of the market in 2022 were first-time buyers. So that is what is lacking in the market at the moment. Transactions, the amount of people moving, and the price that people are purchasing at. That's the two big things that have changed in the market. And of course, investors, second home buyers. I mean, disastrous really if you're in the middle of buying a second home when the budget took place. 3% to 5%, a big increase. I mean, what is it? 66% increase. All that's going to happen is less people are going to buy second homes. More people are going to wait until they retire, till they buy another house, so they don't have that second punitive threshold really. But if you look how much it is at 500k, from the 1st of April, you're going to be paying £40,000 to buy a house at 500k as a second home. So I think for a lot of people, they just sit down and go, let's just not bother. Let's go to Italy, where they're standing there with their arms open wide, saying, "Come and buy a property here," and pay very little tax. So we've got to be a bit careful really when it comes to this punitive regime that we have. Market headlines. Let's try and look at the positives, I think. Obviously, the Bank of England base rate's gone down, which is talked about. I mean, we've got to remember with the Bank of England and the government that they have tax receipts every single year of £1.1 trillion. And you've got to remember as well that they're still borrowing last year £126 billion on top of that to fund the government. So we can't balance the books quite yet. So it's important to note that really. So that's work that's got to be done on that really, especially when we have a budget like Rachel Reeves' budget, where we're borrowing more money, and that's why we're seeing mortgage rates increasing at the moment. The swap rates, which is where mortgage rates originate from, they're on their way up because of the worry about the higher level of government borrowing, effectively. So that's something about. But if you look here, really, I mean, as my kind colleague here noted about the GDP, we're continuing to grow. So there's no chance of a recession anytime soon, which is good. Obviously, no recession. 2 quarters of negative growth. Inflation, obviously, things are still going up at 1.7%, and hopefully in the next 2 inflation reports, we're going to see that leading us into a nice interest rate cut on the 19th of December. We've got a 10% increase in transactions in September, year on year, which is positive. We've got sales being agreed up 30%, that's from Rightmove, so a bit of caution with those figures. But generally, the market has been busier, but it's very much at the lower end. So the market between 250 and 500 is where the market is at in England at the moment. And I think an interesting stat that 85% of all property that's sold this year in England and Wales is under 500,000. And in the southeast, that's 75%. So that's where the market is at the moment. And I think from our perspective as well, we were thinking about the £750,000 question really. If you're in a house that's worth £750,000, you've lived there for 10 years, you bought it at 500, what do you do? And you think, should we move? Your next move is probably over £1 million, or around about that figure. Stamp duty at that level is extremely high. So what do you do? Do you downsize? I think there are some people downsizing, but I think there are a lot of people just staying there thinking, actually, it might be a tiny bit small, but I tell you what, let's just stay, because otherwise it's going to cost us a huge amount of money to move. And I think that's the big thing that's holding us back, is not just the cost of living and interest rates and mortgage rates, stamp duty, everything like that. It's just a case, it's just a whole package of moving costs people a lot, really. But obviously, very wealthy, that's what we're seeing in places like Winchester. Stamp duty isn't so much of an issue. But where we're seeing it in development, stamp duty is often included within the purchase price, and that's one of the big incentives we think at the moment that can help, along with 5% gifted deposits and things like that. And I'm not going to talk too much about how many new homes we're building, so I'm on that panel later on, sort of 20 to 3 I think it is. But you know, we've never built 300,000 houses a year, ever. So how are we going to do it in the next 5 years? Well, it's almost 4 years now. It's going to be very, very tricky. I don't want to take up too much time because I know we're running a bit behind schedule, but I'll just talk about house prices very, very quickly. So in the UK, typically we don't just have one index, we have 4. So it's interesting to understand where these indexes actually come from. So the top one is Nationwide, you often see that quoted. You've got to remember the Nationwide though, that is just a section of Nationwide's mortgage business that they're looking at for that graph. You've got the UK House Price Index. That's the only index in the UK that looks at every single transaction, including cash buyers. And bearing in mind, cash buyers is about 50% of the market at the moment. So you can see that actually prices are doing all right, really. But I'll show you, that's across the whole of Great Britain, that is, for the UK House Price Index. You've got the Halifax report, which again, like the Nationwide, is just a section of their mortgage business. And then you've got the Home Track report, which is effectively the Zoopla house price report that some of you might get emailed on a daily basis. And just interesting to look at some of the transactional business. And if you can't see it here, you can see it on the tellies on the side here, really. But you can see here how many houses we built here again, 52,000 in the last Q3 2024. You know, it's not really it's not enough. But as we saw earlier on, residential transactions 10% up year on year. Last year was a bad year. Mortgage lending up, mortgage approvals up almost 50%. But I think you've got to remember there though that we're looking at month on month. So it's 50% up on last September, not as the market as a whole, just to make that abbreviation. But if we look at the market as a whole in terms of the city market, you can see actually the big change here is the transactional numbers. So you can see we're about a third down on the amount of people actually moving, and that boils down to what we've been talking about: cost of moving, interest rates, etc. All it's done is that people can afford less, and less people are moving. But rental rates are staying pretty good. But we've got all the average prices here on the left-hand side too, and you can see year on year what prices are doing in the southeast city market. So you can see Southampton there. The average price in Southampton, surprisingly, is 272,000. That surprises quite a few people, actually. It's one of the lowest priced cities on the south coast for buying a property. And what we found, actually, when it comes to first-time buyers, is that they're moving back into city centres, they're moving back into one-bed flats, because that's all they can really afford at the moment, 1- and 2-bed flats. When it came to Help to Buy, obviously we saw there that two-bed houses was really where first-time buyers wanted to build. Wanted to buy, sorry. But you see all the other cities here: Portsmouth beating Southampton for a change, 301,000, and various other bits and bobs in there. But also, if you want these slides and you want any other information about anything on the South Coast, do let me know, and I can give you a little bespoke report of an area that you want. This looks at the regional markets here, and you can see really with the regional markets that it's a broader picture across the whole country, really. Prices are down, transactional levels are down. It's interesting to look at transactional levels, really. We're lucky here in the southeast that we have the most amount of transactions in the UK in the southeast, so we're less affected, I think, by the housing market. We have the highest earners in the southeast as well. So I think from our perspective, we're lucky here in the southeast. If you look at the northwest, for example, the average house price there is 191,000. So, but it's interesting when you look at that. You look at yields when it comes to that. The yields are high when it comes to the north of England. Where are we next? Yeah, it's a nice little chart to scare you all. This is the southeast of England when it comes to house prices. So you can see year on year we're having a little bit of a party when it comes to prices. But that's at the back of that. If you want to move, you've got to take the offer, and that's what's happening at the moment. The residential market, you've got to take that offer. New homes buyers, developers are taking offers 50, 100,000 pounds less than the asking price to get to their sales rate, really. So I think I've got Ned here going, get on with it. But I think the market, we're at the point where I think we're going to get to Jan, we're going to be in a much better position. Hopefully we're going to have lower mortgage rates, houses are taking less long to sell, and mortgage rates should be less really. So I think moving forward, from our perspective, I'm going to talk very quickly about transactions, because I think it's quite important to show that actually for the last year was the lowest amount of transactions in the last 10 years in the UK. So we've got a long, long way to go to get back to the level that we want to. You can see on the left-hand side there, the big ones, that's back in 2007, 2008, before the crash. So we've got a lot to do to get back to the numbers that we want to get back to. And I think really, I can stop it there. This is just a monthly chart. You can see the 3 spikes here. Anybody tell me what those are? That was the stamp duty holiday. We always remember that, up to 500, and what an effect that had on the market. And that shows me that stamp duty is holding the market back a little bit, really, along with everything else, really. And we'll talk about this later on, but this is the amount of new homes that are being built in the UK as well. Like, again, the lowest it's been since Q4 2017. So, again, a lot of work that's needed to be done. That big dip in the middle is COVID, by the way, if anybody's interested in that. So yeah, that is it really from me. Thank you very much, and I'll pass on to my next